LaSalle's focus on secular investment strategy themes shifted in 2016 with the introduction of E, or environmental factors, to our demographics, technology, and urbanization framework. E factors identified by LaSalle include sustainability reporting, green building certifications, and mitigating the risks of climate change. Our latest insight report, posted on our website, focuses on the emerging E factor of decarbonization and the path to net zero carbon. We see this as a major secular change that will drive real estate performance in the years and even decades to come. Carbon dioxide is a critical driver of global climate change, and construction activities that take place in buildings are responsible for an estimated 40% of global carbon dioxide emissions. These facts make it clear that any solution to the global climate change crisis requires the engagement of the real estate industry. Our report identifies the financial motivations for investors to focus on decarbonizing their real estate assets. On the demand side, major corporations, who are also leading commercial real estate tenants, have made commitments to operate with net zero carbon emissions. This will require them to look for low or no carbon emitting properties, of which there are currently very limited supply. Supply and demand mismatches can be the recipe for outsized rent growth and superior investment returns. In addition to tenant demand, a growing number of investors are looking to decarbonize their portfolios due to their own net zero carbon commitments. And finally, there are regulations imposing penalties for buildings that fail to make strides towards lowering carbon emissions. We see this trend to decarbonization coming at differing speeds in different properties in different markets around the world. Data from JLL helps point to the cities expected to lead the way towards decarbonization, and the report identifies other factors that will contribute to higher and lower pacing of the transition. And while investors need to be aware of the forces leading to decarbonization, significant capital investment is required to transition properties. Timing this investment based on market evolution and building life cycle is critical. For investors, being too early on a secular change can harm returns just as being late to adjust to a secular change can be. In the end, we emphasize that getting to net zero real estate is a long path with a number of different investments required along the way. And timing those investments will help investors realize steady and perhaps even superior returns through an extended period of secular change in the real estate market. We encourage you to take a look at the full report on decarbonization and real estate.